So we'll know Bob this week.
So I can do it right now. I have an oil update. Here's my oil price. This is an update. I just checked it. A Castrol GTX 5 quarts, 1788. Polyfull synthetic 5W40, 208 liters, military grade, $7,788. And Spectrum Natural organic peanut oil, 16 ounces, $25.99. And that has been your oil update.
That has been the oil update. Fantastic. What can I get an oil change for though?
No, I don't track that.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Welcome to the Money Path Podcast with your hosts, Bob Iacchino and Mike Arnold, founders of Path Trading Partners. Bob is out of the office today and not on the show. Your co-host, Stafford, is filling in. So let's join Stafford and Mike with a casual conversation of news and the markets.
We have lots of stuff to cover. Though. Let's see. Follow up with Facebook. Well, first off, Facebook's rallying back to the daily rotation zone. Slight little rally back after dipping below 150, now trading about 160. And the FTC's confirmed Facebook probe over privacy practices. The quote, the FTC is firmly and fully committed to using all of its tools, that is all of its tools, to protect the privacy of consumers. The acting director of the FTC's Bureau of Consumer Protection said in an emailed statement earlier this week. So the FTC takes very seriously recent press reports raising substantial concerns about privacy practices of Facebook. Today, the FTC is confirming that it has an open, non-public investigation into the practices. Well, that caused Facebook to tank a little more, breaking out from major support. So, nothing to touch with Facebook. We just rallied back to a key area, but I could long-term easily see Facebook, if this continues, dropping even down to 133. And if that's broken, major supports around 117 to 120 now. So no bottoming pattern just yet. First cross the rotation zone on the weekly. So we have tons of overhead resistance. So be very careful with Facebook right now.
I have a little Facebook tricky dicky news.
What's that?
So a lot of the Facebook data recently that was acquired from 50 million users was processed in Europe. And the privacy laws in Europe are very stringent. Basically, you could never open a Facebook in Europe because of the privacy laws. However, America's privacy laws are quite laxed, right? And so what this company did is they set up a home base in America. It might be Rhode Island. You can do all sorts of crazy corporate stuff in that area. They gathered the data in America, but then processed it in Europe. There's a lot more shoes to drop on this caterpillar for sure.
Shoes to drop on a caterpillar? I've never heard of that statement before.
I just made it up as we speak.
It's one squishy caterpillar.
We got a lot of shoes. A lot of shoes to drop.
Lots of shoes to drop. What was this? Twitter was also tanking. Twitter stock is down pretty big following a report from Citron Research that exposes major potential problem for the social media company. Alongside Facebook, Google, Twitter is now being hauled in by Senate Judiciary Chairman Chuck Grassley to a hearing on data privacy on April 10th. Twitter will generate $400 million this year by just selling user data, not advertising. So this is just selling your user data. They'll generate $400 million, but now they're under investigation for selling that data. So that's like a big chunk of, because they essentially get 100% margin on selling user data. So if they were forced to stop that or curtail it to an extent, that would hit them by 400 million, their bottom line by 400 million. Oh, this is the thing. Again, this is the first shoe to drop on the caterpillar for Twitter, but it looks like there's going to be lots of privacy investigations into these companies selling and what data they're selling and how easy it is for consumers to understand what they're selling or even opt out of what they're selling. Because, finally, Facebook started making it easier to go through and see what all the individual apps that you approve are doing, but you still don't know. And, if it's not explicit, you're like, I didn't want them to sell that data, and where did they even get that from? And so I think this is going to be ongoing. We're going to see more and more of this. So a lot of these social media companies, I would not rush in to purchase their stocks until we see a clear bottoming pattern. Even on some of these short-term rallies, they just go from really oversold to slightly less oversold, back to the rotation zones. And if you want to know what the rotation zones are, check out our YouTube channel because we talk about them all the time.
That's a nice in-house ad. What is the over and under price on a Russian Twitter bot?
I have no idea.
Can't be worth much.
By the way, let's see. We also had a couple things on Snapchat. Let me look this up. Snap cuts about 100 employees in latest round of downsizing. So Snap is cutting another 100 workers. Snap, which operates Snapchat app, cut around 120 engineers earlier this month, and now they're dumping another 100 workers. So it looks like they are downsizing. We talk about their stock, and we've talked about it triggered the double top pattern, and it is hit. It's hit the first target. The first target, which was 1580, bounced up to the rotation zone. Now hit that 1580 level again. The full target on this is 1502, so roughly $15. That's what we're watching for on Snapchat. In further Snapchat news, Stafford, did you see that Snapchat is banning ICO ads, initial coin offerings?
Good.
So they're jumping on that bandwagon.
That's great. I'm all for it.
So, and Twitter, back to Twitter. Twitter's also banning all crypto ads, not just initial coin offerings, but all crypto ads.
Fine.
Quote, we know that this type of content is often associated with deception and fraud, both organic and paid, and are proactively implementing a number of signals to prevent these types of accounts from engaging with others in a deceptive manner.
That's good.
So there you go. We're draining the swamp.
No, I will say that for politics.
Crypto swamp.
Cryptos is getting the scum out of the pool.
Yes, the scum out of the pool, so we can have caterpillars freely living, and they don't have to worry about pond scum pool. The CBOE, that's the Chicago Board Options Exchange, which I was a member of, recommends that the SEC allows Bitcoin exchange-traded funds. The CBOE Global Markets Committee wrote a letter to the U.S. Securities and Exchange Commission, that's the SEC, recommending that they not interfere in the development of a Bitcoin exchange-traded fund, which is an ETF, because they are similar to other commodity-based ETFs, and that was done on March 23rd. Let's see. The SEC has expressed disquiet over sufficient liquidification in the cryptocurrency market, so liquidity, as well as potential risks for manipulation. But the CBOE is saying, look, it's not much different, and there's futures out there. There's ways to play in this space that are legitimate. So we just can't walk around with these fears anymore, and you got to get out of the way and let us develop a ETF.
That's right. This is all good.
Yes. Well, again, the more legitimate tools that there are, it does validate the legitimate crypto space even more. And as we've said on the show, we don't know long term which cryptos will survive or not long term, but we know cryptocurrencies as an entity will survive.
And the market cap has dumped so much, like 200 billion now, 255 billion it's at now. I think it was at 800 billion at some point at its peak. It's dumped so much soon it's going to be a ripe opportunity for big money to come into this thing. Now, that's a non-educated opinion, but at some point, this is going to look like a green light to real institutional money. Who knows if that's real or not, but it seems like this is going to look like an opportunity.
There will be an opportunity. That's why we look to trade this all the time. And when we get a bottoming pattern, we will, again, we'll review it on our YouTube channel, but to stand out of the way, because, until there's a clear bottom in these things, they can go lower before they can go higher, which...
Oh, for sure. We're just those little fish that suck on the side of a big whale, right, in the ocean.
Sucker fish, like the little... What are those? It's like they hover on the whale and they eat. I mean, they're beneficial to the whale.
I haven't seen a whale yet because we're still getting the scum out of the pool, if you know what I'm saying, right?
The scum, not whale scum, but
pond scum.
Exactly. So still be careful in the crypto space. And if you want to learn how to trade these, or when there's high probability entries, again, I'm pumping our channel, but we've helped other people left in the comments how we've helped them make money, or helped them save money, or helped them learn how to protect themselves with stops. And hey, I made extra money even going short this thing because of what I saw in the videos.
Yeah, a lot of YouTube channels are running around in the crypto space like the house is on fire, but we're building houses. So,
yes.
We're taking the opposite approach. We're doubling down on content and delivering quality technical analysis.
And we're not doubling down on cryptos. Every time it drops is not buy the dip. We wait for the high probability reversal patterns, and then we take advantage of them. And everything is not a hodl. Everything is a tradle, just as we've talked about before. So we approach it very, very differently than a lot of channels. That's our little crypto. Did you have anything else in the crypto segment with the pond scum that I haven't seen? Because I'm managing the legitimate chart patterns and everything else, and you're monitoring the draining of the
the skimming of the pool.
I think you're going around. You're monitoring the septic tank service, that's sucking out the overflowing septic tank of the crypto world.
Here's a good rule of thumb that I've come across, because most of the bad actors are shaken out, and we can thank the SEC and the fact that certain of these schemes cannot maintain because they're not legitimate. But the rule that I see as to think if something that comes up that I've never heard of before is this traded on multiple legitimate exchanges? Is this truly defining its value by trading on all the different exchanges that are out there? I'm just not going to name one because I don't want to promote any particular one. But is this a wide traded asset? Okay. So if the answer is no, meaning that whatever you're into is locked into one place, that is a red flag for me.
As we've talked, I've been reading all these stories too. On another side note about these, these kids who've made a boatload of money because they got in early on Bitcoin. They sold some of it out on its most recent run up, and they made hundreds of thousands of dollars. And they've gone out. They've bought things like houses or Lambos. But the problem is, Coinbase had to turn over anybody who made over $20,000 in cryptocurrency profits to the IRS. So now these people are going to their accountant saying, "What do I do?" And they don't have enough left. Even if they liquidate, because we've pulled back, from 19,000 to 6,000 something. Where's it trading now? It's trading at 6,700. So even if they liquidated the rest of the stuff, they wouldn't be able to cover their tax bill. So now they have a minor problem. So if you are trading this, you're in the U.S. and you've made any profits in cryptos, you got to file your taxes, and you should be looking at that. We're going to completely stress that all the time, especially now since it's tax season and taxes are due in a couple weeks. Speaking of taxes, here's a good tie-in. Amazon, it seems like, and we're not making a political statement here as we always do, but President Trump slams Amazon over taxes it pays and impacts on other businesses. The president criticized online retailer over taxes, use of the postal service, and impact on traditional retailers. So Amazon sort of had a big gap down, somewhat recovering, went dipping below 1,400, down to 1,365. Now we got the first cross the rotation zone on the daily. This will probably fill its gap back up to 1,500, but we have now overhead resistance. Amazon's not one to rush into either, because I don't think, even though they came out and said, well, they're not considering anything now, you somewhat know. I mean, I've witnessed this with the Trump methodology. Something gets tweeted out, then their denial comes out from the White House. Then a little while later, it's like, all right, we didn't have anything in place, but now we do, and here's what it is. So again, I'd be careful with Amazon stock. It's broken through critical support.
Yep.
Any other take on Trump slamming Amazon?
He's just bringing awareness to the fact that the fantastic men and women of the Postal Service are not getting a fair return on them boosting Amazon's image, because they're doing the last leg and the last mile through rain, snow, and sleet. And in my opinion, I do think that the Postal Service is doing the dirty work of delivery for Amazon, and they need to be compensated a little bit more.
Well, I think the Postal Service should be privatized.
Well, I think that in some way it is. It's not connected to the federal budget. It's outside. But I don't know enough about that.
They don't make money. No, they're subsidized every year because they lose. They've lost money way before Amazon.
They say they may. Well, whatever. They're in the Constitution. I have no jurisdiction on that opinion.
So, all right. We also had NVIDIA, another one of the tech stocks, got hit pretty hard this week because they halted their self-driving tests. And we talked about the Uber accident, and the person was killed, the pedestrian was killed. NVIDIA has decided to halt their self-driving tests because of that. So around the whole world, they're not testing it. We are temporarily suspending the testing of our self-driving cars on the public roads to learn from the Uber accident. Our global fleet of manually driven car collection vehicles continue to operate. So they're manually driving and collecting data, through their chips, but they're not, if anything, self-driving, or even if there's a person in it that was monitoring the self-driving, that's been suspended all around the world. Quote, NVIDIA has no choice but to take steps in the context of the fear, uncertainty, and outrage likely to be simulated by a robot car killing a human being. This is precisely the event that is capable of slaying a nascent industry in the crib. So they're like saying, wait, we're going to be extra cautious here. So again, that's one of their major revenue sources. And by the way, who makes the chips? Because Tesla dumped Mobileye in favor of NVIDIA for all their autopilot stuff. And Tesla also said we don't need LiDAR or anything else. We can do it all with just the NVIDIA chips. And NVIDIA has now suspended their program, saying we're going to find out what went wrong. By the way, what was it? I just said the name of it. Microeye. But by Intel, they said that their chips would have caught that in all their testing, so that's sort of interesting. We'll get to more Tesla in a bit. But did you see that video I sent you with Waymo teaming up with Jaguar, the I-Pace, to add level 5 self-driving hardware to the new I-Pace electric vehicle?
Yeah, it was boring, but it was good. But it was boring.
Well, it was boring, but it was very interesting.
It was short. It was over in just a blink of an eye.
What?
Yeah, well, that just tells that, if you don't have LiDAR, you're a fraud.
Yes, you're not going to do this without LiDAR. And that's not even, Waymo also only allows their stuff in geofenced areas where, the roads are all mapped out and it's loaded on board the software. So the car within its geofenced area can only handle people within that. But these are fully level 5 capable cars with no backup driver, no nothing. And it's operating in certain parts of Phoenix right now. It has been now, but they're adding in this to the I-Pace production cars. And these are going to get rolled out later this year around other parts of Phoenix you can just use your app, call a car up. The car drives to wherever you are with nobody else in it, picks you up, and drops you off at your destination. So as long as you're within its geo-fenced area, you're good to go. That's pretty impressive.
Yeah.
That's a big boost for Jaguar and the I-Pace. We also had now in Tesla news, because there's been a lot of stuff in Tesla this week. Tesla took a major dump. We were watching for the trigger of our weekly double top. The only way to get it was able to get in on this was off the daily when it closed down big on the 27th, essentially triggering the pattern on the daily chart. Went all the way down beyond the stop reduction level already. Got down to 250. Actually, the low was 248.21. Rallying back a bit now. I wouldn't be surprised to see us try to fill the gap back up to about 280 level. But this is not a buy. This is major overhead resistance. We've talked about this Tesla short for a very long time. Finally triggered. We have a full target down around 220, which if you listen to past episodes has not changed because it's a very reliable chart pattern. When it tanked earlier this week, it did hit the 200-week simple moving average where it found a little support. So that's interesting. But what the NTSB is now looking into this fatal crash. Tesla won't say they have. It was so interesting in their press release this week. They know how many people that day had autopilot on. They know how many times autopilot along that section of highway has been engaged. They released all these stats, but they don't know if it was on in this one car. Now, the one car was badly burned, but they collect all this data and it goes back real time to their centers. So if they won't confirm that it was or wasn't on, I'm betting it was on. There's been other reports from the family that the person who was killed had complained to the Tesla Service Center multiple times about the autopilot swerving, and other people have said in the latest update with their autopilot software, on off ramps, it somehow splits the difference between the highway and the off ramp, and if you don't take over, it's like literally going to crash you into the divider between the highway and the off ramp. That's just been on Reddit boards. Don't know if it's true or not, but Tesla seems to have some problems, and this may only get worse. They also, last night after market close, and again, the markets aren't open today as of Good Friday, they're having to recall 123,000 of its Model S cars. Any Model S sedan built before April 2016 has to be recalled due to the bolts holding the power steering module in place can corrode and either come loose or break. What's interesting is this has been all over the Reddit boards for literally months, and people are showing it their thing break off holding the bolts in hand, and there's no corrosion on them whatsoever. They will just shear off. So by the way, if you have a Model S before April of 2016, get it into Tesla to get this fixed. They're starting to have some major problems. Tesla will suspend Model S and X production today. They were recording Good Friday because it's ahead of target on building those this quarter. Tesla said the pause is unrelated to Model 3 production targets. I'm not buying because this is March 30th. They have March 31st. Quote, during the temporary shutdown of Model S and Model X production, workers who don't move to the Model 3 line will have to take unpaid time off or can take paid vacation days. A thing from Doug Field, the Senior Vice President of Engineering there, quote, prove the haters wrong. Tesla urges workers to ramp Model 3 production up. Doug Field said if the team can exceed 300 Model 3s a day, it would be an incredible victory at a time when some investors are casting down on the company and shorting its stock. Quote, I find that personally insulting that you should too. Let's make them regret ever betting against us, he wrote in a March 23rd email. You will prove a bunch of haters wrong. Weren't they supposed to be doing 2,500 by the end of the quarter, so a week? So if I'm doing the math, if they are shooting for 300 a day, times, let's just give them the benefit that they're running it all 7 days. That's 2,100 a week. They're not even there yet, and they've not changed their guidance on that yet. Also, didn't Mr. Elon post on his Instagram over the fall the automated robot line that did everything?
The Dreadnought is what he called it. The Dreadnought.
Yeah, well, if they have to shift all these workers over to try to get to 300, what's the automated robot line doing exactly?
You know what? At this point, he can't keep the puppet show going. It's getting too real.
Don't look behind the curtain.
It's just entertainment at this point.
Yeah, but we're finally watching, this crumble.
It's got a long way to go. The fanboys do exist, and they are still thinking this is a fire sale in the stock. So,
did you see though? I've been following a lot of stuff this week. It essentially, they're delivering these Model 3s with damage to the paint, huge body gap things. And if you go up and say, "I'm not taking delivery of this car, I want this fixed first,"
yeah, that's all over the place. Yeah, it's all over the place.
They're like saying, "No, you either take the car the way it is, or get back in line and wait for another one." Like, you're spending $55,000 or more on this car, and that's a fair chunk of money to spend on a car. And they're like, I'm not satisfied because there's huge gaps in my body panels, or the paint's like literally messed up, and you're telling me either take it or leave it. It's absurd at this point.
No, it's funny. It's entertainment.
Yeah, but it's and people are still like, I guess I'll take delivery. Why? Why give them your money?
What they do in the showroom is they angle very harsh, direct light at certain angles that hides the flaws.
Or they have delivery stations that are intentionally over dark, like they're in their back service bays that like you can inspect the car, but it's way too dim. And people are like, can I take it out and look at it outside? No, you have to inspect it here. It's like, okay, really? This is I don't even know what to say.
Yeah, sit back and watch, man.
This is going to be very, very entertaining. Oh, and they had their bonds all downgraded this week. Moody's Investor Services downgraded Tesla's debt on Monday afternoon. Moody's is keeping a negative outlook to the credit line, quote, due to the likelihood that Tesla will have to undertake a large near-term capital raise in order to refund maturing obligations and avoid a liquidity shortfall. And these bonds are already trading way underwater. They've had 2 downgrades this week. Some's already at junk status. And the bonds generally lead the stock price. So when you see these credit downgrades and everything else, bonds get hit first because, again, they're the first debt holders, and then they're actually think they're secured debt holders, although if a lot of these covenants, they can be wiped out too with Tesla. So very, very fascinating. I would not rush out to do anything with Tesla right now.
The non-reliable gossip is late 2018, Elon Musk steps down and a retired car person comes in and straightens it out. That's what the lovers who were turned into no longer lovers want to dream. I just think it will get picked apart for pieces.
Yeah, I think it'll hit bankruptcy and then get picked apart.
Right. Mm-hmm. Yeah.
Because why would you go on and take they have massive debt obligations. There's like people like Apple should buy them. No, because Apple would just be flushing all that money down the toilet.
They can't do cars.
So that's our Tesla bashing segment. No, it's just
at this point it's not bashing.
I think it's pretty fair. We've actually seen all the strings on the puppets.
Yeah. The news has caught up to us.
The news has caught up to us. We were way ahead.
Deutsche Bank never went to zero, but we won't mention that.
There's still time. Where's Deutsche Bank? Again, Tesla I think will go to zero. Where is Deutsche Bank though trading? It's trading $13.98, and they have so many derivative things to unwind still. It'll be interesting, but this low was $11.19 last year, so Deutsche Bank's not doing too hot. It's only $13.98. I still think it's going lower. So markets are closed today. Cryptos still trade, though. Cryptos.
So has the market done a little bit of rebound? I think 2 weeks ago there was an 800-point negative slide. And
we had the big sell-off at the beginning of February, which we retested. Then last week we had the big sell-off. Now it's holding, and I talked about this on the YouTube channel. we're watching for a key close below the 200-day simple moving average, which right now is coming in the S&P E-minis 2588. So right now it keeps trading back and forth right at this key level of support with the 200 moving average, which is a very widely watched moving average. So that's what I'm watching for. We have overhead resistance from the declining rotation zone. Yeah, it was up big one day, down big 2 days, up sort of mediocre yesterday. So, and again, it was a shortened week and liquidity was drying up yesterday and its rally. So we're going to have to see. In order for me to at least look at this anywhere positive, we'd have to get a close back above 2,700 in the S&P, or if we get the close below about 20, I'm going to call it 2580, then I'll watch for the lower prices in the S&P. So it's just at which way it breaks out now.
Very good.
So I don't really have much else. We've covered. That was essentially my what, which is, we're in consolidation right now for the S&P, and it's which way we break out of this consolidation. But there is a ton of overhead resistance, and if we do break this critical support, we've broken some critical support, and we would then start watching for much lower S&P prices with no bottoming pattern yet in sight.
Very good. I thought this would be a difficult episode to edit, but it's not going to be.
No, I think we covered a lot of good stuff.
I don't know we're going to put our advertisement in on it, though. You
don't need to. It's fine if we don't have it in every week. So, do you have anything else to add?
No, great show. Next week we'll have Bob back, ladies and gentlemen. But this was a nice concentrated lemon juice of information and content. So make sure you hit that bell and click subscribe and write a comment and all that gobbledygook that they say on YouTube.
Yeah, ring the bell. Can we tell how many people have hit the bell button?
I've not seen that. I don't know.
What?
I mean, maybe I can get into some deeper analytics. I haven't even bothered.